This water company, founded in 2005, just exited for the second time last month, and it widely flew under everyone's radar, me included honestly, even though it might be a transformative moment for the water sector and the new sign something big is cooking if you connect the dots. How could I miss a $700 million transaction? What's at play here? How does it tie to a sequence of events happening in the private equity space of the water sector for the past 2 years? And what could it trigger? Let's dig in. First, let me give credit where it's due. Smart Water Magazine and Walid Khoury are the two only water followers who spotted the news, which gives me the opportunity today for a deeper dive. So what are we talking about here? Well, on the 28th of April, LG Chem divested its water solution business to Glenwood Private Equity in a deal valued at roughly $1 trillion, which, if you don't remember the calculation you did on your couch watching Squid Game right now, makes about $700 million. We'll come back to that number, but it's maybe not the most impressive part of that story because there's more. LG Water Solutions reported revenues of $173 million last year with a profit margin of $45 million. So an acquisition priced at $700 million also means that Glenwood Private Equity paid a nearly 16x EBITDA multiple, or if you look at it differently, a 4-time revenue multiple. Now, in itself, 16x EBITDA is not from another world. After all, Xylem acquired Evoqua 2 years ago on an estimated 23x multiple, and if I take the modeling done by RBC Capital Markets, LG Chem is explicitly listed as filtration in their taxonomy, and if I go by the model's curve, it's spot on the line. Like, literally, it couldn't be more on the line. It's almost as if they also had that booklet in hand when they shook hands. But 2023's market is not exactly 2025's global economy. And if you look at Veolia's recent move to acquire the last 30% missing of their Suez merger by buying out CDPQ's shares, they did so at an 11x EBITDA multiple. And at the bottom of it, even if not exactly the same membranes, Veolia Water Technologies is the legacy Suez WTS, that is the legacy GE Water, that is the legacy Xenon, that used to be a membrane company. So, in other words, at 1 week's distance from another, Glenwood Private Equity and Veolia paid substantially different multiples for somewhat comparable companies. Still, it pertains true that water companies get acquired at larger multiples than the S&P 500 average of roughly 10, but the premium in LG's case is more substantial. Now, why did I say that this is the company's second exit? Well, actually, LG Water Solutions is the result of LG Chem's acquisition of NanoH2O in 2014 for an undisclosed amount, but that I had estimated last year, if you remember, to be around $200 million. Between 2014 and 2025, LG Chem further developed the business, added ultrafiltration and ion exchange solutions, marginally though, to the RO basis, and invested in factories and production capabilities, but as it was an organic growth and not a sum of bolt-on acquisitions, it stays true to say that 2025's LG Water Solutions is NanoH2O with a bit more history, experience, and size. So that also means that LG Chem made a 3.5x multiple of its initial investment, which is also a 15% internal rate of return, roughly estimated, and falls fully in line with the typical expectations of a late-stage investor, as that's the case for LG that acquired NanoH2O instead of them raising a Series C. And where that is particularly interesting is that even though everybody would agree that LG Chem makes solid reverse osmosis products, everybody also has been of the impression that the revolution predicted by NanoH2O in its early years didn't fully happen either. It has been, ever since, a mildly successful company, not a raving one taking the market by storm, but a steady, sturdy player. The few articles covering the deal estimate that LG Water Solutions reached a 21% market share in the reverse osmosis membranes game, achieving rank 2 in that sector behind Toray and in front of DuPont. I personally believe they would rather be around 10% market share and so behind Toray and DuPont, if I try to interpolate my various data sources and using GWI as my reference. Also, looking at GWI's market research for reverse osmosis membranes, the expected compound annual growth rate over the next 5 years is of 5.5%, a sizable growth, but not an atomic growth. And there is a relative consensus around water folks, and especially desalination folks, to agree that reverse osmosis membranes become more and more a commodity and not really an explosive innovation and growth field, if you also recall what Prakash Govindan, the CEO of Gradient, told me last week.
There was a panel on the future of desal. Paul Scholes was the moderator, and he asked the question to 6 people. There were consultants, there were EPCs, there were OEMs, there were Europeans, there were Americans, there were Africans. Everyone was there. And he asked the question, in the next 5 years, how do you see desal plants or desal technology changing? And almost across the board, except the head of IDE had a different answer. The other 5, nothing much will change. And that was so depressing for me.
The reason why I tell you all of this is not to be the party pooper, it is because it is an incredible validation for the water investment thesis. This means that even if your technological field gets commoditized faster than expected, even if your growth is sizable but not gargantuan, and even if you become a respected player but not the major spaces disruptor, you will still serve a very commendable internal rate of return and a very likable return on investment. And the 3 reasons why LG Chem sold its Water Solutions division also contribute to my positive look over the full story. Sure, on the surface of things, number 1 can hurt a bit. LG wants to focus on core high-margin businesses, and a bit like GE when they sold GE Water, well, the water arm is not the most sexy high-margin business when you also have a battery arm. Understandable, but there's a subtext. Actually, investing in batteries is gobbling cash. And LG slowly starts to be short on that said cash, as showed by the recent degrading of their credit score to BBB by Standard & Poor's this March. So yes, batteries are core and potentially higher margin, but they also are the reason why LG had to carve out some bits of their empire. So what we learn from reason 1 is you don't divest from water for fun, you do it because you need it. And interestingly, LG's stock is down by nearly 13% since they announced the move. Now, reason number 2 is even more of a positive for the water sector. Indeed, it looks like if LG Chem had been given a choice, they would not have sold their water arm, but rather their petrochemical assets. But the thing is that right now, those wouldn't yield too good of a return. So if they wanted to get cash fast and in a good deal, that wasn't an option. But water was, water 1, oil 0. And finally, reason number 3 is basically reason number 2 seen from the positive angle. They had an acquirer for the water arm, which again, they didn't have for the petrochemical one. And Glenwood's interest in LG Chem's water division is neither surprising, as they have been gobbling more water assets recently, nor an isolated case, as more and more PE players are taking strong positions in the water sector. Now, it is not the first time that Glenwood invests in water, and it's not even the first time that they invest in a piece of water tech that's divested from the larger LG conglomerate. Their very first investment in 2014 was already a water company with SK Magic, then Tongyang Magic, a major Korean water purifier and appliance rental company, and they since continued their shopping with LG Electronics Tech Cross, probably the world's leader in ballast water treatment. Plus, Glenwood has the reputation of investing in its acquired businesses to further scale them, not to rip them apart. So then, building an over $1 billion yearly revenue water platform is an important element to be noted. More to that in a minute. Before that, I'd like us to have a look at the present, at what's actually happening in the water sector. Because I know I've alluded to it more than once, but I think I never listed to you all the moves that private equity did in recent years, and I think that will give you a sense of what's going on right now. Sorry to interrupt, I wanted to quickly thank my sponsor, Simple Lab. If you're in the water industry, Simple Lab has you covered. Simple Lab is your one-stop shop for certified laboratory testing kits, from routine lead sampling to walk-ins and specialized analyses like microplastics, PFAS, and rats. Order the testing you want online, choose from hundreds of accredited commercial labs, get free round-trip shipping both ways, and by the way, if you have your own lab and just want help with kitting and logistics, Simple Lab can do that for you too. No more coordinating labs, chasing shipments, or wrangling EDDs, just streamlined ordering, clear results, and real support when you need it. It's lab testing simplified. Head to gosimplelab.com, it's the first link in the description, choose your test, and they'll take care of the rest. Thanks again, Simple Lab, and back to me. Look at Ember Infrastructure. They took H2O Innovation private in 2023, a year where they also acquired a majority stake in groundwater treatment and technology, placed a growth investment round in on-site performance just some months after they took a minority investment in low-impact development technologies at the end of 2022. And since the close of the H2 Innovation takeover, they've also used that new platform to beef it up with the acquisition of Nexera Distributed Water in 2024. We've also seen Pennybacker Capital acquire Cambrian in 2023, something I covered in greater details. The link is in the description. And if we go a bit further in the 2020s, New Mountain Capital acquired Inframark in 2020, which continued to acquire and consolidate small utilities and engineering firms in the 2 next years. In 2021, they also took Aegean Corporation private, which they also used as a platform for bolt-on acquisitions. Yet another private equity, Sun Capital Partners, carved out Koch Industries Separation Solutions, something that honestly resembles quite much LG Water Solutions with ion exchangers and membrane technologies, at the end of 2023, the same year where their European arm acquired a mega group, which they used to do smaller bolt-on acquisitions. I'm not fully counting here their acquisitions of Anderson Commercial Plumbing and Tenax in 2022, which would be a bit more adjacent to the water sector, but I'd say they contribute to a water strategy at work at Sun Capital. Next PE firm active in water, KKR created Axius Water in 2019 as their vehicle to go shop smaller water and wastewater technology companies like Environmental Dynamics International and Napier Reed they acquired in 2021, Attack Solutions they bought in 2022, Triple Point Environmental, which hopped on the ride in 2023, Meta Water Technologies that they gobbled in 2024, and Aeromode, their latest acquisition that they closed in early 2025. If that sounds like a lot, it could very soon become much more. KKR has been designated as the preferred bidder for the acquisition of Thames Water, and if the £4 billion deal hasn't closed yet, it should this June, it would again change the picture and the involvement of KKR in water. I'll go faster on Angeleno Group. They made growth investments in Newterra, which they then exited to Frontenac, another PE firm, and they are still invested in Flow Technologies and, of course, Gradient. Logical transition, I guess. Frontenac acquired Newterra in 2020 and confirmed they loved shopping from fellow private equity funds as they acquired Serum from Science Water in early 2025 to add to the Newterra platform, which again makes for a logical transition to Science Water, the reference PE fund in water, I'd say, with their continued investments through Central States Water Resources in the consolidation of US water and wastewater utilities. You know the drill. The detailed links to my deep dives are in the description. Meanwhile, they're also developing a second technology platform with integrated water services, which they acquired in 2019 and then used to acquire MMBR Systems and Hyperion International Technologies in 2023. On the other side of the Atlantic, EQT leveraged its cash extracted from the sell-off of half of SOAR in 2021 and of its sales of Desotec to Blackstone. You're never going to believe it. Yet another PE firm investing in water to invest in AMCS Group in 2024. They have also made quite some bolt-on acquisitions in SOAR through their first major acquisition, Nyhus, which since serves as their industrial platform. Now let me rapid fire some more as to not to bore you out. Apax Partners acquired On-Course Home Solutions in 2021. Diff Capital Partners acquired 26 water assets from JW Water and Robson Utilities in 2024. Morgan Stanley Infrastructure acquired 7 Seas Water in 2020, invested in Allianz Source Tasting in 2021, and in Apex Companies in 2023. Let me breathe. Meanwhile, if you followed the equity section right, you already know that Blackstone bought Desotec in 2021. They then also invested in Geosyntec Consultants in 2022. 2022 again, but different funds. Bain Capital acquired Aqueous Vets, and then Harrington Industrial Plastics in 2023, and then also Pumpman through Harrington. Little spoiler here, we'll soon hear of that on the podcast. I'm not saying more. You'll have to subscribe. And that's not even the full list, as HIG Capital, Little John & Co., The Jordan Company, Ridgewood Infrastructure, Blue Wolf Capital, and Stonepeak also did significant water moves in the last few years. So let me summarize this part with this euphemism. Private equity is active in water these days, and Glenwood's takeover of LG Water Solutions is just the latest installment in a long and impactful series. Which brings us back to LG and Glenwood with this simple question: what now? I mean, we've seen that Glenwood acquired, depending which source you believe, the second or the third largest RO membrane company in the world. They announced a follow-on investment of 200 billion wons. Again, if you haven't followed during Squid Games, that's about $138 million, which they'll use to expand manufacturing capacity, namely through the building of a third production plant. They also envision further reinforcing marketing efforts to target geographies in developing markets that LG hasn't fully covered yet, in order to leverage the raving demand for reverse osmosis that is flooding in from overseas water projects, to quote them. As mentioned in the beginning, I don't believe that reverse osmosis membranes are a raving market with flooding demand, but I guess they have to write that in the excited press release of their investment. It's about logical. So I'd say that their next investment direction listed in the press release might be more accurate. They plan on doubling down on R&D. And that's interesting because traditionally, larger water companies don't really invest in R&D themselves. They'd rather participate in external innovation programs and then eventually proceed to some clever M&A moves to secure the coolest kids in town as, in fact, an R&D investment. So when a private equity firm says it will invest in R&D, I can't help but hear that they will do some more bolt-on acquisitions to serve as this said R&D. In a rapidly commoditizing market like our membranes, R&D is not a luxury, but a way to stay relevant. We have, for instance, recently seen DuPont introducing fouling-resistant membranes amidst price pressure coming from the rise of Chinese players like Vontron. I don't know how they say it. Which, if I'm allowed to play Monopoly with Glenwood's money here, begs the question, what bolt-on acquisitions could they do to serve that R&D objective? Well, I would see 4 possible directions. First, they may want to enhance their existing membranes with a coating, and if that's the case, aquaporin is probably at its lowest market valorization it has ever been, as they have historically struggled to find the right market positioning and traction for a revolutionary technology that has taken them to space and derives from a Nobel Prize. So I totally could see a world where Glenwood offers a higher-end range of aquaporin-coated reverse osmosis modules. Important disclaimer, this is just my speculation. I have zero insider insight from a publicly listed company, and I have zero intention to manipulate anything with this. I'm just thinking out loud. Along the same idea of coating, I could think of the graphene specialist/coaters out there as an interesting extension or bolt-on for the former LG. Think of Cleantech Water in Australia or Evolve in the UK. 2 companies that I would believe have zero interest in an acquisition as of today, but with a clearly outlined strategy and a good multiple. Why not? So that would be path number 1. Find a cool coating to put on the existing material. My second idea here would be product related as well and would this time change that said existing material. Think for instance of Nala membranes using a material that enables much higher chlorine content. Not only would it enable the former LG to leapfrog DuPont's anti-fouling line, but it would also open them a broader section of the wastewater reuse market where pre-chlorination is often used. In a moonshot, I could also think of Zvitterco and its Zwitter ionic material, but I believe Zvitterco is already too big to be a bolt-on acquisition. I don't see how this could happen smoothly. There would be more product moonshots in that bracket, but I don't deem them realistic, so I stop my hallucinations here. So at 1.5, Nala membranes and Zvitterco. The third possible path for bolt-on acquisitions and synergies, still at product level, invest in spacers. The obvious pick here being aqua membranes and its 3D printed spacer elements. It's doing wonders for Osmoflow. It would probably also do wonders for the former LG Chem. Now the question there would be the structure of the deal. Should they go for a license, a minority stake with a delivery guarantee, or would aqua membranes be up for a full exit? Their Series B is not even 1 year old. I'm not sure the timing would fit, but who knows? Finally, the fourth possible path I think of is to look at adjacencies. I mean, Glenwood would be integrating the former LG Chem with a growing water portfolio, but the existing spare parts are not in the direct adjacency of desalination or wastewater reuse. So they could think of a brine mining solution to deal with the RO concentrate or of a beefed up pre-treatment lane. I mean, they already do a bit of ultrafiltration, but they could do more. My thought on that is that if Glenwood plays the typical PE game and somewhat dresses the bride for a new exit down the line or for IPO, they would be better off doubling down on the product path with a coating, a material option, or a spacer enhancement. But if they want to build a water company, they will need to somewhat connect the dots and fill the gaps between at least some of their existing elements, and then sky's the limit. After all, Glenwood Private Equity has $3 billion of assets under management. So that's the story as it is today. It's been surprisingly little covered, and I would probably have missed it if it had not been for Walid's wariness. So I thought I'd bring it to your attention, also with an open question. You see that I'm speculating quite a bit on what I would do with a reverse osmosis membrane company. You may have better ideas than mine, and I'm curious to hear them. So come tell me about it in the comments. Now, to be clear, my closing thoughts here are overly positive. If you remember my investigation into which VCs made the best return in water tech, Nano H2O was one of my suspects for a return north of 5x for its seed investors. So in a way, they have been opening a path that many thought impossible. But as their growth after the exit to LG Chem has not been explosive, we maybe forgot a bit how important that investment story was. So seeing them a decade later come back in front stage with a new exit at a 16x EBITDA, plus seeing that exit be to a private equity fund in the middle of a wave of these PE funds seeking their teeth in water, is a great validation of the investment thesis of many early stage investors currently quite active. Remember, this is a funnel, and it only is as strong as its weakest link. Early stage investors need great entrepreneurs to take off and bring to market great ideas, and these entrepreneurs need their cash to finance their unprofitable years. Then, these two families of players need later stage investors to fund the growth rounds, and all of those need exit routes, which is where PE funds, strategic players, and why not one day IPOs come into play. So having proof that there is a functional world in which every stage of the funnel gets a bang for its buck is a great positive reinforcement that cash is not burning in a vacuum. To me, this is a great day for water tech, so I wanted to share. And with that, that's it for today. If you want to ensure you don't miss out on my next reporting, make sure to subscribe, and if you do, I'll see you next time. Have you ever heard of a membrane that refuses to break? It sounds uncommon, but it's true. Meet Bluefoot Membranes, a Belgian company that has developed the first and only unbreakable membrane specifically designed for MBR. If you're new here, membrane bioreactor applications. This technology is setting a new standard in wastewater treatment. Water engineers and industry experts have tested this membrane, and no matter how much they pull and twist, the membrane holds strong. Now, it's not just about membranes, it's also about an award-winning and passionate team that doesn't take impossible as an answer. The people at Bluefoot Membranes are driven by a mission to make wastewater reuse the new standard, united by a shared purpose to leave a blue footprint on the world. So yes, they manufacture cool membranes, but they also push the boundaries of what's possible in MBR technology. To learn more about them, check the link to their website in the description. A big thanks to Bluefoot Membranes for sponsoring this episode, and back to me. Intriguing place to record, right? We're at the airport.